Let's take a look at some Monero moon targets for the next bull run here. Now we can dice and slice charts a few different ways to try to give us a leg up if price makes higher highs or higher lows beyond a range. You can look for patterns, you can look for a trend with EMAs. It can be subjective, it can be objective based on math, but in general it's always looking at the left side of the chart to predict the right side of the chart. So if we start with Fibonacci Extensions, using the Fibonacci retracement tool, you can pick a high and a low. It can be any high or low on any time frame, and it will give you an extension above the high or above the low, in this case the 1618, 2618, for both of these levels. Now to me, logically, these make the most sense because they're extreme highs and extreme lows. You can also fib out this high and this low. Really doesn't matter at the end of the day. It's just to give you some idea of levels to look for if price breaks these highs. So on our way up, in the future, if this is a real deal bull thing, really I'm always looking at these horizontal levels for resistance. If they were resistance before, they're going to be resistance again, and it usually takes a period of consolidation to break above them. In a perfect world, we actually consolidate between these two here, between 99 and 115, which makes sense from the psychological resistance as well. So any round number like 100, or anytime you're moving from two digits to 3 digits, or 5 sats to 6 sats, whatever it is, there's always a psychological resistance there. That's what that means. Another thing I really like about the $100 level, 115 level, there was this diamond pattern here that broke down, obviously. Also arguably a inverted head and shoulders thing, but there was a lot of consolidation here. And again, when you see this consolidation here, you can visually predict that there's going to be a lot of volume here. VPVR is going to be strong here. Anybody who's still holding from this level is going to be looking to get out at break even if they aren't in it long term. You know, if they've been holding since late 2018 and they want to get out at break even. That's why looking at the left side of the chart helps predict the resistance levels. So once back to fibs, we got the 1618 around 136 here. We've got the 2618 at around 200. Typically Bitcoin doesn't go for the 2618 extension, but alts typically do. Not that I'm like predicting $200 is a certainty here, but it's just saying if we break the 136 level, definitely look for the $200 level, which is again another psychological resistance. And just to illustrate the power of fibs further, if we have any chart pattern, just pick anything you want. You always want to fib out the high and the low, and it gives you a level, and then you can take the measured move. And between those two levels, it gives you a expected range for the breakout target. So this was BTC 2018-2019. We had this ascending triangle bullish reversal thing, and we broke up, hit the expected level pretty quickly after breaking that horizontal. And there wasn't really much in the immediate vicinity as far as resistance on the way up to try to predict like, oh, there was a high here or something. You know, there just wasn't anything. It was kind of in no man's land. So again, a really good reason to use fib extensions. This next one is yearly pivots. Now they're based on highs and lows of the previous year. They print on January 1st every year. They do not change. So to me, these are not subjective. You know, I don't pick on the chart the points. This isn't like fibs. It just all calculates it based on the highs and the lows. So I definitely like pivots from that respect because they take me out of the equation. It's just based on whatever happened to price. So the immediate fibs here are again 115. So that level is just massively showing resistance on the way up. And then beyond that, it's like 165 and then 200. So there's not much above 115. You can see there's a large gap here. And again, these printed January 1st. One thing you'll notice is if we break an R5 pivot, even though you can just infinitely calculate these based on the equation, if we break the R5, it's usually a pretty good sign that it's just bullish insanity beyond that. You can also treat these like a ladder. So you'll notice it broke up, retested support, broke up, retested support, broke way up, retested. You know, it'll keep doing this over and over again. And these fibs actually look decent in that price seems to be respecting them for the most part. especially here. This is really what I'm looking at. When we hit these highs, this could have been an inverted Adam Eve, and it wasn't. It got rejected at this pivot. Obviously, hindsight, but something to watch over here. You know, if we have chart patterns or reversal patterns going into yearly pivots, I don't expect those to be just magically reversing to the upside if down is expected. You know, if we rising wedge bearish divergence into a yearly pivot, the expectation is that that's going to be a really strong resistance level. So you can always just add these to any chart, any time frame. You know, you can bump this down to monthly, weekly, daily, whatever. I just prefer the yearly because they seem to be stronger levels. If you look at Bitcoin 2012 to 2019, you can see that when we are volatile in the previous year, the pivots expand. When volatility declines, pivots contract. And again, we broke the year R5 in late 2017, and it was just, you know, that was it, right? We also hit this yearly support pivot at the end of the year despite being printed on January 1st. And again, I'm just like pointing out random correlations here, but these are important levels to watch, and it's just easy to set it and forget it. You just turn it on, and it's just a level on the chart. Really helps me understand important levels when I'm trading. The next one is MA multiplier. So this is the 2-year MA moving average. And what you want from this multiplier is the ability to see when is price overbought, when is price oversold. This is actually one of the worst examples. So this is probably the 6th or 8th article I've done on these bull run TA stuff. And this is the worst example because in general, you want price to live in the middle. You don't want price to live on the outer boundaries, outer limits. This likely suggests that you need to curve fit this a little better for the previous and back testing type stuff. Because in general, if it's below the 2-year MA, you want it to tell you when to buy. If it's above, you want it to tell you when to sell. So to see over a year's worth of price action above this level just kind of makes it silly to me as far as being useful. One way you could make this useful is if you say to yourself, okay, when we break, this is 5 times the 2-year MA, by the way, the red here. So if we break above the red here, I'm not going to sell anything until we break down from this 5-year, 5 times the 2-year MA again. So in this case, you'd be holding, if you're using that strategy, you'd just be holding this. Another thing you could do is dollar cost average your way out of a position, so sell little by little, just continuously. The reverse is true here, so if we're below the 2-year MA, it says it's a buy zone, and you could say, all right, I'm just going to buy continuously, or I'm going to turn my dollar cost averaging on for Monero, and I'm going to buy and keep buying until we're back above this green line. And then I'll start selling when we're above this red line. Another troubling thing for this MA multiplier is that it's pointing down currently. So you'll notice if we have a real deal bull trend over multiple months, multiple years, the MAs will curl up. So this will self-correct. You know, this high won't be the high for resistance very long if price starts moving up. So right now it's projecting a high of 225, and the 2-year MA is around 75, I think. So these will move up. It'll begin to look like this, you know, if we start to trend up. So this example is either really good or really bad, depending on what strategy you're using, like I said, because, you know, if you sell immediately, if you sell all your position as soon as we break out above this MA, then, you know, you're losing out on all this here. If you buy immediately, you're wasting potential opportunity for lower. So you could definitely, you know, fit this a little better. And in general, you want the back testing to be as tight as possible to give you a leg up in the future of what is possible for this specific pair. This is Tesla. I'm just showing this mainly because it's not crypto and it's just something else. Tesla went to price discovery mode, new all-time highs beyond $400 late last year. And above price discovery, you don't really have targets to watch for. You know, you can actually look for patterns. So there's the Adam and Eve here. Obviously, if you know what you're looking for, you can fib this out. Like I said, that 1618 level, that'll probably show you, you know, around 400. The 2618, the 5618, who knows what extension this is, but it's way above anything that you'd necessarily expect from a chart pattern, right? So depending on how you're trading that, If you're just selling everything on the 1618, you're missing out on this insane upside. Ideally, you're saying to yourself, okay, we're at all-time highs. If we break all-time highs, we're in price discovery. When we're in price discovery, anything's possible. And you got to have that conversation with yourself. But if you're using this MA multiplier, again, it tells you where to buy, tells you where to sell. It told you that, price is way up here by this multiplier. Might be a good time to start offloading any long positions, right? Regardless of what's happening in the world, in a vacuum, this is what the math is telling you based on what's happened previously. And this backtesting is super clean because it illustrates these highs, illustrates these lows extremely well as far as when to buy, when to sell. Just stupid simple for me, if you know what you're looking at, right? And lastly, the Pitchfork. This is just a trend channel with specific rules. So you pick an anchor, pick a high, pick a low, and then you get this median line. So price loves to live in the median line. It will continuously return to the median line over and over again for as long as the trend exists. When it gets up here, it's overbought. When it gets down here, it's oversold. So bids here, asks here. One way to look at that. It's always good to see if price is free floating. What are the probabilities that it's going to go higher versus retest the median line. There are other rules or observations regarding the strength of breaking the median line that I really don't talk about ever, but this is a decent example. In general, if it reverses very swiftly through the median line, it'll typically, go all the way through it. So if this fails here, it'll probably go all the way down. And the inverse is true as well. If this has a really strong upper thrust, it'll definitely want to reach for the outer limits here around 145, 146. This will keep moving up. I actually like the rate of change for this Pitchfork really well. It's slow. That's what you want to see for a high probability long-term bullish trend.